Hello, Market Watcher. I'm David Ravel, and this is Value Side at the Close on Wednesday, September 29. Today, waiting for Washington to get its fiscal act together. Well, once again the nation waits for our members of Congress to come up with next year's budget and an extension of the federal government's debt ceiling. Both actions need to be taken. This is a given, and it's literally been months now that those two tasks have been staring Nancy Pelosi in the House of Representatives right squarely in the face. But another day passes, and still nothing is done. And you can see the frustration beginning to build on Wall Street. Waiting to solidify the nation's budget and debt ceiling is a crucial step in settling interest rates and calming the financial markets. Now, much is being written right now about the debt ceiling, which will be reached depending upon who you listen to, either by the middle or end of October. But the federal government's new fiscal year begins this Friday, and still no budget has been reached. And again, it will be a patchwork of continuing resolutions that will be used to pay workers and contractors until that budget is reached. What a way to run a government. We can certainly see some of this malaise creep over into the financial markets as the stock market continues to drift today. Uncertain of their direction, we're now over 6 weeks and 1,000 points lower than our last Dow high reached way back on August 16. Equities did manage to close up today, but in no way did they repair the damage done from yesterday's drop. From a technical perspective, all the major averages, the Dow, Nas, and S&P, are now trading below their 50-day moving average, as are over 2/3 of the stocks on the New York Stock Exchange. The only positive was the advanced decline issues, which saw a slight edge for advancing issues. Overall, we saw the group most affected by these laborious negotiations, the U.S. Treasuries, finish down for the day after trying but failing to rally earlier. Gold, oil, and cryptos also all down on the day. About the only bright spot were those equities, which managed to finish up, but only by the slimmest of margins. Now stay with us for today's market comment, a look at some of the behind-scenes action at Fed Chairman Powell's testimony before Congress. Well, yesterday Jerome Powell addressed the Senate Committee on Banking. Today, he'll address the House Committee on Banking, Housing, and Urban Affairs. These testimonies are an important way in which the Federal Reserve communicates with the legislators on the Hill. Adding to Powell's testimony today is the fact that the chairman's term comes up early next year, and it's not at all certain whether he will be reappointed. Standing in the way is Senator Elizabeth Warren of Massachusetts. Undoubtedly, Senator Warren will exert a great deal of influence over just who becomes the next Fed chairman. For some time, Warren and Powell have taken entirely different paths, with Warren unhappy over Powell's position on corporate governance and his views on inflation. So much so that yesterday Warren indicated that Powell's views were dangerous. Seeming to join in with Warren was chairman of the committee, Sherrod Brown. Now, for those who are not inclined to follow the somewhat arcane world of politics, I remind you of the dominant role that the government has played in this economy over the past year. First, it shut down the economy through social distancing, quarantine, and closing non-essential businesses. Then it was the government which reopened the economy and provided the strategy and funds needed to recover. I dare say that we would have to go back to the management of the economy under Franklin Roosevelt back in World War II to come up with a comparable time as this. So with all this background, Jerome Powell was treading on eggshells yesterday as he tried to make the case for the Fed's monetary strategy. First indicating that he felt that while we are going through a bout of high inflation now, he sees that as moderating at some point in the near future. Warren disagrees, and she sees high inflation far into the future. Now, trying to emphasize the positive, Powell noted the strong performance from the economy for the first half of the year. And he noted that the economy has gained 750,000 new jobs for the past 3 months, a hot point for both Brown and Warren. Overall, it seemed to me that Powell was portraying an economy that is ready to work its way back to normal, barring any unforeseen event, particularly any recurrence of the pandemic. In his handout to the senators, Chairman Powell pointed to the 4 support programs that have now been closed, having fulfilled their mission. The 4 closed programs are the Corporate Credit Facility, the Main Street Lending Program, the Municipal Liquidity Facility, and TALF, the Term Asset-Backed Security Loan Facility. Just a note here, this is exactly the overall direction that I see Powell and the Fed going in for the rest of the year, with a likely significant reduction in those monthly bond purchases. This would make sense, especially if, as Powell indicated, the Fed sees the recovery continuing. Finally, a word about the politics behind the scenes yesterday. From my point of view, Powell's tenure on the Fed has been that of a pragmatist. Trained as a lawyer, the first non-economist in quite a while, Powell has impressed me as one who just works to get the job done. Clearly, this has fallen far short of the aims and desires of Miss Warren and likely Miss Brown. But I wonder if we really need a more ideological chairman at this time in our economic history. Be careful what you wish for, Senators. Sometimes it's the pragmatist that can get you through a rough time. And that's the value side for Wednesday, September 29. I'm David Ravel. Please join me in praying that our country may get back to work.